What is going on YouTube? Hope everybody's doing great. Futures Brizio here, 3:30 p.m. on July 14th. Hope everybody's having a good week so far. And just wanted to jump in here and we'll just do our usual talk about a few open trades, talk about our range bars here, and we'll go from there. So before we get started, do the most important thing. Smash that like button, subscribe to the channel. Any questions, comments, leave them down below. All right, so actually, let's talk briefly about futures, and then we'll go back to Forex. All right, so you guys, the last, two videos I've made have been talking about using range candles as opposed to regular time-based candlesticks. I'm not going to rehash the whole thing, but very quickly, range candles, which is what you see on the chart here, are candles that only paint when price moves a predefined amount, okay, that you set, all right, in the interval. So that's right here where it says 20R. These are range candles. I have it set to 20 ranges, which for a futures market is like 2 ticks. So, all right, or 2 points, excuse me, 2 points. So each one of these candles represents a couple of points, all right? And in Forex, 20R would be 2 pips, okay, for you Forex traders. I don't use a range this short for Forex, which I've talked about and I'll show you. But since I'm more, for futures, I'm more of a day trader, you have to shorten that length down. Otherwise, you can't trade it on a short-term basis. All right, but again, these are not time-based candles, very important. So all these time frames mean nothing when you're looking at these type of candles, okay? But you can see what's really nice about this. Again, I don't want to rehash all this. To me, these show market structure and especially consolidation levels way better than regular candlesticks because it consolidates it into a much shorter time period, because as long as price stays inside of a pretty tight range, you don't get the big whipsaws with candlesticks, diving in and out of ranges. It's going to be pretty well defined. And obviously, the longer you make this number, the more, defined it is. And, you have to find that sweet spot between giving you enough detail, but not have the chart be too noisy. But these are super nice. And if I compare it, so if I look like, this is like the 1 hour chart, which is of the, and this is corn, by the way. This is the 1 hour chart of corn, okay? And you can see, really noisy gaps and, all this whipsawing. The moving averages are all over the place. And normally this would be like where I'd be setting up to trade, to day trade this asset. Okay, I usually will enter on a 1 hour chart, do analysis on the 1 to 4 hour chart. But most of my entries are going to be somewhere around the hourly chart, maybe 30-minute. Whereas if I go to this chart, I mean, look how much easier this is. I mean, not easy, but you can see here, and you can use the moving averages, which I like to use in day trading futures. I don't really use it for Forex, but I like, this is a 21 to 34 simple moving averages, nothing fancy here. But I do like these 2 moving averages, and a simple pullback anywhere into these is kind of like dynamic, having the 2 of them with this. It's kind of like a dynamic range in between. So any pullback and even a little dip below there, in this case for a long, is really helpful. So you see this big move up, pull back into the moving average, very obvious, and then we get a nice pull away. And again, this is much easier to read than what I just showed you on the candlestick chart. All right. So the one trade, so the last trade on this was on Friday. So there's been no trades in this, since then. Again, using the range bar chart, you can see this pullback, and you can see right here, this candle, this was on Friday, this past Friday at 9:30 in the morning. So pretty much right at market open. This was an entry, and you could have taken it back to this old high right here. That would have been great. And then you can see we consolidate and we're pulling back again. And so maybe this is setting up for another long tomorrow or whatever. I don't know. I'm not saying it is or it isn't, but this is the type of setup that I look for. So this will definitely be something I watch either overnight tonight or certainly tomorrow. All right, but the one I'm in is this one, which is, and I left this running, which I don't know. I may regret. Because when the market reopens for the overnight session, which is like around 7 or 8 o'clock tonight, it can be really erratic. It can like gap down, can gap up. Who knows? I don't have a TP set on this. I do have a stop loss way down here, as you can see that I put in after I took the trade. I entered on this candle right here. So this liquidity sweep happened, and then I got in, and then I put my stop loss. So I got in over here. So you can see it's up right now, a couple $100. It's only one contract. And so, but you can see pretty obvious, right? Pull back. This is wheat again. You can see wheat very often violates this longer moving average as it did right here, right on this 34. So it's very common. This has very deep pullbacks for it to do that, but it went higher. Very, very impulsive candles, right? So this is very obvious to see. This is all buying right here, right? And then we go into this consolidation. Price pulls back, and we have another attempt to go higher. And then this one fails at this level. We have this big wick. But you can see this pullback was pretty shallow, right? Never got to the moving averages. So, you know, you certainly could have traded this, and if as long as your TP was reasonable back to the previous high, this is still a valid trade. But you can see what happened. You know, like the buyers tried to come in, got back up here, rejected, and the sellers tried to really step in here. And whether this is sellers or the big banks just trying to get better prices, and they forced it back down. We came back down to the support, and here's one of those consolidation levels I talked about, right? Very obvious, this little thing right here. You would not see this on this clearly on a candlestick chart, okay? If I put a little box around that and I flip over to a 1 hour candlestick chart, okay, not as clean. We have this old gap over here. We have wicks dipping below, okay? So we go back to the range chart. Very clean, sitting right on the levels. Price then breaks below. And, you know, at first you might think, oh, okay, we're going to go short. But you can see you had that one candle, and then we entered into this consolidation, very clean and obvious. We had this liquidity sweep, and then that's when it got my attention for the long, because obviously those sellers were not able to break this. However, anybody that went long right in here maybe had their stop loss sitting below this red line. They got swept out, and then boom, they turn and go higher. So that's when I got in after that. It's when I entered here. And so you can see it's a little bit late entry, but there you go. So we'll see what happens tonight with that. Like I said, we talked about corn already, and that was wheat. That's the only one I have active. I didn't really see anything I liked in soybeans today. Soybean meal. This one probably could have been a long. You can see there's a much bigger liquidity sweep down, but we never breached any. Even though we broke this structure level here, we never took out any market structure. This swing low down here, so this probably will go higher, but I didn't take that. And for soybean oil, this one could be starting to actually really start to move down. The moving averages have rolled over. There's not any real key market structure on this until you get way down here. So this one's kind of bucking the trend a little bit. Most of the other ones I think are pretty bullish right now. So I may start looking for shorts on this the next time we get a decent pullback towards the moving averages. So there you go. So, but that's how you use it. How I use it, day trading futures. I use a 20 range interval. I do like using the moving averages just for dynamic support and resistance levels. But I'm still using market structure. But this just gives you a much cleaner view of pullback areas, consolidation areas, and range areas that you can use to your advantage for entries. Okay, so that is it for futures. Just that one trade today that's still running. Over to Forex. So let me see here. Okay, so you can see I have 3 Forex trades running on my funded accounts. I have pound Aussie short, euro CAD short, dollar CAD short. The dollar CAD one's not probably very good. That one's in a little bit of loss. I mean, it's about $26, so it's a few pips down. I think that's mainly because the dollar has weakened a little bit too, off the CPI data today. Inflation was came in lower than expected today, which for just for people that are looking to invest, higher inflation tends to draw higher rates in the market, which therefore attracts more investors into a currency. So if you get an inflation number that comes out lower than expected, it tends to pull money out of that currency. Okay, and so with both currencies being overall being weak, then you have this kind of consolidation. However, we'll look at the chart though, and we'll see what we think. And again, the Euro CAD and the Pound Aussie are both sitting in profit. So first thing I'm going to do is change the interval because I don't use 20 because I don't day trade these. I'm going to go to 500. Okay, and we're going to go to the let's go to Euro Canadian. And the other thing, I'm going to turn off these moving averages. I don't really use these in Forex. And you can see here, Euro Canadian, I took this trade this morning because I had noted this range right here, okay, where price had gone up here, came down, formed this nice zone, went up again, tagged the top bar, but failed to break through, and came all the way back down and broke through. Now, I know I just kind of showed that in the futures market where it broke through, set up a little, 4 candle range, and then finally broke higher again, right? That's what I just showed you before. To me, this is a little bit different. And ultimately, yeah, I could be wrong. My stop loss, I don't know exactly where I put my stop loss. I think it's actually above this candle because I got in, let's see. Well, instead of just guessing, I got in at 160.93. All right, so let's go back here. 160.93. Yeah, so I got in. I got into that today. So I got in on this candle right here. And you can see price didn't really do too much. And so that's why I got in because we had this break, right? Very clear, big break. Now, this could have just been a liquidity sweep. And then we come back right here and we have this green candle that forms. Looks like it sweeps some liquidity at this level, tries to go higher, and then it fails. It doesn't even get back into the range. Goes up a little bit and closes. And then the very next candle, you can see tried to go up here, so it must have been green at one point, but it rejected off this level and then closed lower again. And so that's when I got in at 160.93, which is basically, right around the early part of this candle. Okay. And I got into that trade today. So it was definitely on this candle. All right. And so that's my basis for taking it. My stop loss is sitting above this candle because I figure if it does try to run back into the range a little bit and then, throw a false high, I didn't want to get stopped out having it this tight. So right now my stop is up here. If this thing starts to run down, obviously I'll move my stop down and try to lock some profits in. Okay. So that was my reason for the entry here. I love these very clear, like double top, very well defined ranges that these range candles will give you. If we switch to candlesticks, and let's go to like a daily chart. I mean, the range is pretty good there too. But again, I just think this is a pretty clean look right here overall. But this one's actually pretty good on the normal candlestick chart. But again, you can draw a very well defined range here. All right, Pound AUD is the other one. And it's pretty much the same setup as Euro CAD. Again, we had this move up, a pull back towards this defined range, up again, failed. You can see I had an alert set above and below here because, this very well could have just, come down here and then blown right back through here. But it didn't. And I'm thinking this probably will continue. Just based on the double top formation and this well-defined range and the fact that price really made 2 attempts to go through this range and failed. It had this move up where it went back to the old high and back. Then it started coming down. The buyers tried to come in right here, didn't really get very far, and then it rolled over again. So to me, it looks pretty bearish. So I'm in this trade, and that one's going pretty well. I got into that one, I think, yesterday, I believe. Pound Aussie. Yeah, yesterday I got into this trade. Okay. So I'm still holding that one. I'm probably thinking about, a TP back probably around this sweep low right here. All right, would be a good place short-term target, but we'll see. But that was the reason for that trade. And then we'll look at the what's the other that's it, right? Oh, dollar CAD. Yeah. Okay, so dollar CAD. So here's dollar CAD, and you can see why I went short. Okay, because we went up. There's not really any structure level right here, right? It didn't really form any range. Like we didn't get that side. We just rolled right over and started going down. So when I got triggered, you can see same thing here. This morning I set an alert above because I looked like we were starting to form a range early this morning right here with these three candles, this little three candle sideways formation. So I put an alert and I thought, okay, well, we were just in a very strong uptrend. And then, I said, if I see, when I came to the charts, like I saw this, strong bullish candle, but then followed by a strong bear candle. I said, okay, well, we're starting to set up a range right here. So I put an alert above this little range and then below, and we got triggered on the one below. So I decided to go short. I don't know ultimately how it's going to play out. Nobody does, but I would think that if we're going to come down, I would think we probably will target like this, a minimum target. This is really the next little market structure area, right? They have these little one candle pullbacks. You can see one candle pullback, one candle pullback, two candles, but only one red one. Well, I guess two right here, right? So we have these really shallow pullbacks. And then, so maybe we'll get down back around this area. So if we can get this thing starting into profit, I'm probably a little hesitant about holding this for an extended period because it does look pretty bullish. But we'll see what happens. And like I said, I think some of this was triggered by the weak CPI numbers today, just triggered off some dollar weakness. So we'll see if that holds or if this just ends up being a pullback. And we'll see how it plays out. Okay. So, so that's the trades I've got open. We'll take a quick scan through here, see where else I kind of set up, where I might have set some ranges and some alerts here. US dollar Swiss is kind of interesting, right? And again, this is all from the news today, right? Tried to run up here, kind of broke this range through this big doji candlestick up here. So we've got kind of like this range right here. So, I'll watch that. I mean, you could short this right from here, put a stop above this candle. Not willing to do that right now this time of day, but I'll keep an eye on it. Aussie CAD, that's just messy. I have no desire to even do anything with that. Okay, so this one I should have taken, to be honest. This was dollar Aussie yen. You can see I had drawn the range here. We had this nice, very clear, well-defined, 1, 2, 3, 4, 5, 6 candles. And then on the seventh one, we, started coming back into the range and then boom, shot right through it. So that is technically an entry in my book right there. I know I could still take that, but I hesitate to take one so late in the day. I mean, the spread is still pretty normal. It's 2 pips, so it's not a terrible spread right now. But we'll see. But anyways, you can see how I drew, and I probably did get triggered on this alert. I don't know why I didn't take it. I must not have been paying attention because it obviously went through my alert. And then I had this other one set below the range in case this little downtrend continued, but that never happened. So. Aussie Kiwi has a much bigger range. Okay, so this one's really interesting, right? So let's see what happens with this. I'm actually going to, while we're sitting here, I'm going to set an alert below here because you can see, is this one going to end up being, a double top failed high, right? We were going up, we came down, we moved up, didn't even come back to the old high, and then failed, came back down, broke through the bottom of this range, and now we're getting another green candle right here. But is this a little pullback? Is this a liquidity sweep? We're going to go higher back into the range, or is this just a little pullback? We're going to roll over. It looks fairly bearish, but again, I'm not going to try to second guess it. So we'll see. If this turns and goes back up, maybe I'll put an alert on the upside, maybe right about here. We'll keep an eye on it. I'd love to see this break lower. Like if this fails, this is just a break and retest type thing. We get another one of these big red candlesticks and close below here, trigger this, and that's another opportunity maybe. So I'll keep an eye on that one. CAD yen's kind of ugly. I mean, I just look at these really quick. I just don't like all this sideways. It just hurts my eyes to even look at it, to be honest. And there's just no reason to take it. Euro yen is one of the worst. This has looked terrible for a long time. So moving right on from that. All right. Euro Kiwi was a great trade from back here, but nothing really going on right now unless we get another sell signal on another little pullback and sell. But there's nothing there right now. Pound Canadian, we already talked about. Same thing, Europe, pound Kiwi. You can see pound Kiwi is now bounced off this. We came out of here, went all the way up, came all the way back down, hit this area precisely, and now is bouncing. So are we going to get is this just a dead cat bounce? And eventually, even though it hit this support, it's going to roll over and break through? I don't know. So I'm going to set an alert a little below there. Okay. And I'll just let it play out. Comes back down and takes out these lows. That's fine. Then that might set up for short. If not, then what I'll look for is hopefully some sort of consolidation and then a move higher. We don't have that range right now, so I'm not even going to try to put an alert to the upside. I'm just going to keep an eye on this. If it breaks lower, fine. If it's going to go higher, we'll wait for it to form some kind of like pause, like, those multiple bars moving sideways and then a break out of the range. That's my favorite setup, but I don't have that right now. New Zealand Kiwi, very messy. I know I've got this channel drawn on here, and you can see it's really respecting this channel. I drew this last night. I think when we were at this candle right here, I drew this and just extended it, and you can see it holds this really well. That's the other nice thing about these range bars. I mean, they're very structured. You can see how well this holds inside of this channel. But anyways, there's nothing there really to trade. Overall, it's still a pretty ugly chart. But it was just something interesting to look at. And same thing with New Zealand yen. Okay, this is great on pullbacks, very bullish. So, if we get another one of these one or two red candle pullbacks, I'd look possibly for longs. Although, we're approaching what could be like a triple top up here. We had this high and this high. If it gets up here again, we'll probably see a rejection, at least temporarily. So whether there's another trade in here to the long side before it gets there, but if I were in a long, this is where I'd be looking to get out right about here around this 95 area. But, like I said, we get another one or two red candles down. As long as we don't break structure, like we stay like above this area right here, approximately, then, any pullback here on this nice range chart would be nice. And I think I don't know if I said it, but this is set at 500 interval range, which is 50 pips. So every one of these bars is 50 pips. Okay. And you might sound like a lot, but it's a lot if you're trying to day trade it. And you certainly cannot scalp with a 50 pip range bar, and even a day trade, that's probably way too big. But if you're going to swing trade and you plan on holding the trades, for at least a couple of days, then this gives you some really slows things down and gives you a good chance to analyze it. I do have some other ranges that are a little shorter. I've got a 350 and a 250. Sometimes I look at those if I want a little bit more detail. Okay, I can switch to one of these. It's just going to give you the same view, just with a little bit more detail, right? So there you go. But this is 250, and on the 250, right? Yeah, you can see this little breakout range here that led to these new highs, right? Well, we've already got this one drawn, right? There you go. We came up here, nice little range right here, and then boom. As soon as this rejection happened right here, we didn't even get back down to the bottom of the range, and then we got hit with another big green candle. You could have gone long right here, or certainly on this one as it closed out of the range, and then you could have still been in that long. And, this might just end up being another pullback right here. And so let's see if we can, maybe set up another range right here. We don't know about the bottom of this yet, so I'm not going to draw a range to the downside, but you get the point, right? And another lookout here would be if I was long, I'd be looking to target. Right here is very conservative. This old consolidation. There might be still some liquidity sitting here. All right, some sell side liquidity sitting here. But if not, then maybe back up at these highs. So, it's getting close to a major resistance area I'd be a little cautious of. But hey, if we can get, this thing to dig a little deeper and maybe form a nice little setup range here, there certainly could be another long potentially in the works here to get us back. Because even, let's say it turned from where it is now, and even if it got back to these old highs right over here, that's 73 pips, and I would take that, 73 pips. And if it got up to here, that's 127. So, all right. So, yeah, so that is how I look at these guys. And like I said, my first look is using the 500 period. But if I want a little bit more detail, like, what was the one I was looking at? No, it wasn't dollar CAD. Let me go back to the 500 for a second. What's the one I looked at that was having these really short, like one candle pullbacks? I'm sorry, guys. You guys can. No, I don't know now. I suppose something like this New Zealand yen, right? These little one candle pullbacks. You could probably use this as an example. So this is set on the 500. You got these one candle pullbacks. If I drop to 250, all right, then it's a little bit easier to see these little range areas right here. Like this was that last one. On the 500 range, it was only one candle. But on this one, you can see a very clearly defined range. All right, rejection, came into the range, failed to even get to the bottom of the range right here. Very next candle comes back with a big bullish candle, pretty much matches it. And so you could have gone long right here or certainly on this one. Okay, so that's where the 250 versus the 500 can help you. But I would always start with the 500 just to get the bigger picture. And if I want a little bit more detail, then I could drop to the 250 or the 350 and get this a little bit more detail to try to fine tune an entry and go from there. So that's the 250. Here it is on the 350, a little bit less detail, but actually this is pretty good, right? Because you can see the very clear defined range, rejection candle, okay, right here, close back inside the range. Then the very next candle comes down, tries to go lower, rejects, and then boom, closes outside the range. And so that would have been your entry as far as I'm concerned. Put your stop right below that, and there you go. So that's how you kind of use these. It's very similar to higher time frame analysis, right? You go out to your daily chart, you're looking for your range, your overall direction, you're waiting for price start to pull back, and then you drop into your 4-hour or your 1-hour chart or whatever, and you're trying to, home in on where that correction might end. And so this is the same exact thing, guys, just using range bars, price-based bars instead of time-based. That's all. So instead of using, a top-down analysis in time using daily 4-hour, 1-hour, you're using a 500 range versus a 350 or a 250 range. And you're getting essentially the same thing. You're just not reliant on time, which is nice because you're not going to have as much whipsawing and gaps on the chart and, giant liquidity sweeps and, things blasting out of a zone and coming right back. The range bars will really tighten that up and give you much more defined area to look at. And, it doesn't mean you're going to be right all the time by any means, but I do feel that it makes the chart a little bit easier to look at and manage. And, like I said, you just use that combination of the different intervals to kind of mimic a top-down analysis that you would do using various time frames. Okay? So anyway, so that's a look at it, guys. That's what I'm looking at. in Forex here going into the overnight session and tomorrow. I just showed you, which ones I'm looking at, and we talked about the ones I'm already in and what I'm doing with those. So if you guys have any questions, comments, leave them down below. These are range bars. You can go back to the video I made a few days ago. I did a comprehensive walkthrough on the range bars. It was a longer video. And then I made another one, I think, a day or two ago, just, briefly rehashing, and we did that again at the top of this video. All right, but I don't want to beat the dead horse on that. So smash that like button, subscribe to the channel, questions, comments, leave them down below. And I'll be back tomorrow. Hope you guys have a good night, and I'll talk to everybody soon. Thanks.